Hello out there, scrappers, recyclers, and investors. Welcome to Shark Scrapper Live, where we're talking about the world of scrapping, recycling, and investing from the perspective of the things that influence our primary business, which is scrapping and recycling. I want to give a big shout out to everybody that has joined us here. Wannabe Scrapper, Scrapping Irish, JR Cat, See You Scrapping Roger. Great to see you all here. Gaz in the crowd. Great to see you all here. Rafael is having dinner, so we'll see if he comes back a little bit later on. And Bush Dog was here earlier, but he's delivering a bed to his mother-in-law. So we'll be looking forward to them coming in. Let me know if the volume is good. I think it looks good on my side. So just want to make sure that we're all good on the volume side. Now, before we get into talking about metals, I do have a really exciting announcement to make for any of you that haven't heard yet. I recently spoke with Dr. Neil Hammerschlag. He used to run the Shark Research and Conservation Program at the University of Miami. He has left that program and is starting his own Shark Research Foundation. Now, they're still in wrapping up the legalese part of creating the foundation, but as soon as they do, we will be donating to his effort. Now, one of his primary focus areas is going to be a newly discovered great white shark hotspot off Nova Scotia, coast of Nova Scotia. So we will be the first tag that they put on a great white shark from this new hotspot. It's going to be really exciting stuff. They're also going to be doing a photo catalog of sharks, so we'll have multiple opportunities to name sharks moving forward. So the Shark Scrapper Shark Adoption Program is going strong. We figured out what we're doing and what we're supporting, and I want to thank everybody who has been donating either through direct donations or as Patreon members. All right, now let's get into the meat of what we're here to talk about today. We're going to dive right in with gold. All right, gold on hold. All right, what did I mean by that? If you can see here, we're talking about we've got this nice rise in gold that we've been seeing here recently. But if you've been paying attention, recently it's kind of flattened out a little. It's not moving a whole lot. So here, if you look at the 1 month, it's still going up. But if you look at the 1 week, things aren't looking quite as good. It's gone up just a teeny tiny little bit over the course of the week. And we talked about this last week, what was going on with gold. Let's go back here to the 3-day. You can see in the 3-day, it's even going down. And that's nothing we don't want to see that happen, do we? Ooh, we don't like seeing gold go down. But what's going on? Well, I wouldn't get too concerned here, okay? What we're seeing happening here is the investors are holding off making any major movements until after the Fed meeting, which starts Monday. So the U.S. Federal Reserve is getting together to talk about what's going to happen with interest rates and what they're doing to try to bring us into what they call a soft landing coming out of the COVID and stuff like that. So investors are just sort of treading water until those announcements come out. We've seen that kind of in the stock market too a little bit, but you really see it in gold and silver investment kind of things because that's what's driving that gold price right now. What does that mean for us? Well, when it comes right down to it, if we go back here to the 5-year, gold is still pretty high. I mean, look at this. We're at 1937. We're pushing 1940. So this is still a good time to be selling our material to places like boardsort.com because gold is high, and so they're paying pretty good. Now, I wouldn't expect to see prices going up until after the Federal Reserve reports out later on in the week, and we see what's going to flesh out with the gold market. And then that'll end up driving what happens to the prices for the stuff that we're sending in. By the way, speaking of boardsort.com, I see a lot of you already starting to talk about it. Yes, they are going to be my guest next week. Right here, Chris is going to come up and talk to us about boardsort.com and do some little identification games. So if you have boards that you want to get identified, go ahead and send a picture of them to me at sharkscrapper@gmail.com. Or if you're one of my Patreon members, you can send it to me as a volley, either a picture or a video, and we can get that up in front of Chris. So that's going to be a really exciting time next week. I know, I wish it was next week already. I'm really excited. So it's going to be a lot of fun. Chris, welcome in. Grass Cutter Tim, welcome, Tim. Urban Prospector Jeff, welcome. Great to see you all here. Yeah, I know. Chris, it's going to be really cool. I'm already starting to get some pictures in, man. So yeah, that's going to be a lot of fun. All right, now I thought it would be fun to add another little twist to this live stream, because I frequently get these kind of questions from folks where they like to ask about the business side of being in this scrapping versus a hobby. And I think this is some really good discussions to have. So I'm going to throw in another little part of the live stream, and that is talk about the difference between scrapping as a business and scrapping as a hobby. There are a lot of really important nuances to doing this when you're a smaller scrapper, not when you're, a great big organization like boardsort.com or some of the big scrap yards that we sell our stuff to. But as you're making that transition, there's a lot of important things to think about. Now, the first one I want to talk about today is insurance. You enter a whole new world of insurance when you become a commercial operation. As a hobbyist, you can get away with just keeping your personal vehicle insurance in your name as a personal car. If you get in an accident and you're just, pursuing your hobby, that's okay. The insurance company still covers that, right? Hey, Janet, welcome. Great to see you here. Scrapping Rodriguez, great to see you here. Welcome aboard. But when you become a business, now you have a whole different view, a concern when it comes to insurance. Because if you're using your POV, like I use the Sharkmobile, for the business primarily. If I get in an accident coming to or from the scrapyard or making a pickup or something of that nature, my personal vehicle insurance would not cover that because it was in my business. So, hey, Crypto, welcome. Fishing Frustrations, welcome. Great to see you all here. So I have to get commercial vehicle insurance. Because I don't want to risk getting in an accident and not having the Sharkmobile covered or coverage for somebody else. Or here in Florida, we've got no fault, because there are people that don't have car insurance. So I've got commercial vehicle insurance, and what you will get shocked on is how expensive commercial vehicle insurance is. It's about 3 times the cost of your personal vehicle insurance. So if you think you're paying a lot for your personal vehicle insurance, wait till you get commercial vehicle insurance on your vehicle. Oh my gracious, it's rough. Now, there's other insurance that you have to consider as well. If I'm in a job site and I'm collecting up some scrap and somebody comes by and trips on some of the material that I've been picking up, they could sue me and they could sue the place that I'm recovering scrap. So I have to carry liability insurance. Sometimes you will be required to have liability insurance just to do business with that company, just to be able to do pickups and things like that. You're going to want to you may be required to have liability insurance. So that's a cost that, not everybody has personal liability insurance, but as a business, you need to have liability insurance for those kind of incidents. The other kind of insurance that you will want to think about is if you have a separate facility, a building, especially if you're leasing that building, the landlord company may require that you include them on your liability insurance. So they would be an also insured on that. Then you also have inside, are you going to insure your tools, your equipment? Are you going to insure your inventory? Now, I was shocked how much my equipment insurance went up this year. It doubled. And I called around, and that was what it was going to cost. I mean, there was no lesser insurance out there for the property side of the business. And so I started looking around. I started asking the agent, well, why is the price doubled so much? And they were saying, well, there's so much theft in Florida. Remember, I'm in Florida, and insurance is very locally determined. So a lot of it depends on your state and your country and things like that. But they said there's been so much theft in the state of Florida that the insurance underwriters have had to double, sometimes triple, the coverage on equipment and inventory. So I kind of made the decision that I'm going to self-insure my equipment and my inventory. I'm still small enough that, I can do that. It'll hurt if I have to replace all my tools and everything, but it's not outside the realm of possibility. And oh my God, it was just ridiculous what they wanted for my equipment and inventory insurance. So yeah, just crazy. Roger, see you scrapping. You're talking about, it took you 2 months to get your business liability insurance. Yeah, I know what you mean, man. When I first started Shark Scrapper, I had to call 3 different agents before I finally found somebody who had an underwriter who would take it on. Most of the underwriters out there don't understand this business, scrapping and recycling. One of them wanted to make me consider me a trash company. And so they wanted to insure me the way trash companies have to get insured, with the big trucks out there doing curbside pickups and those kind of things. And oh my God, that was ridiculously expensive. So fortunately, I was able to find a really good agent through my Business Networking International group. And she was able to shop me around to a few people, and we were able to put together a good package with some underwriters for my business insurance. So yeah, that business insurance can keep you really, on your toes. Gulf Coast talking about, fake claims. Yeah, that's a huge issue too, is people submitting false claims. And depending upon what state you're in, sometimes, they just get paid. Or the insurance company will just throw some money at them to make them shut up and go away. And unfortunately, what that does is that increases the prices for people like us who are trying to make this a business. So it gets really frustrating sometimes. Let's see, what other comments do we have here on Earl Fowler? Earl Fowler is saying the minimum general liability insurance used to be $2 million for his construction company. That's the coverage, not his premium. Well, I hope that's not the premium. Yeah, Earl, they so they have my underwriter put me at $1 million. So yeah, that's it's you got to carry that kind of liability insurance. Crypto, thank you. I'm glad you like the t-shirt. I like them too. They're pretty cute. Roger says that his liability insurance turned out to be really reasonable. The liability insurance isn't that bad. It really isn't. It's the vehicle insurance that killed me. I just couldn't believe the vehicle insurance. Let's see. I thought I saw somebody up here that I thought I saw a comment about vehicle insurance. Here we go. Wannabe Scrapper says that his is $4,250 per year, and that's not including his vehicle insurance. Whoa, man. Yeah, expensive. So, oops. All right, so that's that is a huge difference when you move down the path of becoming a business versus a hobby. Hey, if you like having this kind of discussion, let me know so that I can decide if we're going to keep this into the weekly live stream session. There's so much to talk about as you transition from a hobbyist to a business. And I'm going through this myself, and I am happy to share the painful, sometimes not so painful, but sometimes painful lessons that I'm learning. All right. So next up, copper. Oh, we love copper. All right, what's going on with copper? We talked about copper a lot lately because copper's moving, right? There's a lot going on with copper right now, so it's worth keeping an eye on what's happening with copper. All right, so we're going to look right over here at the 5-year. This is why copper has our attention so much. It's been on a pretty good rise here, and we like seeing that, right? We love seeing the copper going up. And last week we were talking about copper possibly going into a super rally or a super cycle. Hey, Jose, great to see you from Miami, Florida. Oh, down by the racetrack. Oh, very cool. Great to see you. All right, so let's take a look at a little bit shorter. I mean, I always like to start with the 5-year copper spot because I love the long-term trends, and we see that it is climbing. But it's hard to see if there's anything going on in the short time scales. So let's go up and see if we can get over here. There we go. So let's see here. Here is the 30-day, which is cool because we've been doing this live stream now for almost a month, almost 30 days, right? We started on the 1st of January. So this is kind of an interesting graph for us because when we first started, copper was down here, and look how much it's gone up just in the month that we've been talking about copper. But this little flat line here has me a little bit concerned about, is this super rally, super cycle going to really play out? Because we've had copper kind of flatten out here for a little bit. Well, this is what I like. This is why I like this chart, and what I like to do is I go back to the inventory, and I'm just going to go right back down here to this 5-year London Metal Exchange copper inventory, and right here, this is why I'm not worried about copper prices going down, or the fact that they're going to be flat. They might be flat for a little bit, but you cannot be this low in inventory and not see copper keep moving up. We talked last week about some of the problems that were going on in the major copper mines around the world. We talked about how there's going to be increased demand on copper in this environment of alternative energy sources and electric vehicles and things of that nature. So I am quite certain that these low inventory levels combined with increasing demand and China coming back into the market is going to keep driving copper prices up. So the good news, we should not expect to see copper prices go down anytime real soon. Maybe there's going to be a little bit of stabilization here until it starts going back up, but copper, I'm confident the copper is still going to keep going up. So what does that mean for us as we talk about, are we going to sell our copper or are we going to hold our copper? What are you all planning on doing with your copper? While I'm looking for the comments to come in, I'm going to tell you what I've been doing. I've been taking in a little bit. You all have heard me say that I hang on to 10% of my things like copper, and I use that as a strategic reserve. Well, I'm actually holding on to quite a bit more right now. I started hanging on to quite a bit more of my copper back in November. Hey, Harold, great to see you. And then as the prices started coming up here in January, I started taking in a little bit at a time. So, like a 5-gallon bucket full of, or a 3-gallon bucket of some number 2 copper or some Bear Bright, something like that. Helps with the cash flow, and which is, kind of important when you're paying for things like the vehicle insurance. But I don't want to I'm not going to take in a lot of my copper just yet. I'm taking in some because I need to have the cash flow, but I am going to continue to take in some, but hold most of it back. I would say I'm probably holding back 80-ish% of my copper right now, taking in 20. So I've sort of got the inverse going of my normal operating mode there. Jose says he can't hear the stream and the stream just stopped. Hey, everybody, let me know if you're having the same problem. Might be a local thing, Jose. I'm waiting for other comments to see if anybody else is having the same problem. Gaz is asking, have you heard that a Chinese company is offering some Peru mines security so they can continue high levels of production? Yeah, this is one of those interesting world geopolitical economic kind of challenges, right? China will let a lot of their businesses go in and do things like that. A lot of the other countries around the world are a little more careful about that. But China takes the view, well, we need the copper, and so we're just going to go in and offer them security. And then what they get in return is better access to copper and cheaper prices and things of that nature. So it would be interesting. It'll be interesting to see if the U.S. and the European countries make counter offers to Peru or do something else to try to help support Peru. Yeah, that's a really interesting one. And Chinese companies are, that's what China does. They are really big on going into countries and just taking advantage of these countries for their natural wealth, promising all kinds of stuff, but then just developing enough infrastructure to move the materials and then disappear once they don't need them anymore. Okay, so let's see, who else is talking about selling? And Justin, welcome. Hey, no worries, man. Nobody's ever late until we're done. Okay. Yeah, and here we see that the U.S. has already said that we're not going to do the same. So, yeah. Anyway, I saw some comments about people selling the copper. So yeah, I would say that prices are pretty good for copper right now. So you probably want to be selling some, but you still want to hold some back. All right, now this next metal is, to me, really fascinating. I love, one of the things I love about getting ready for these live streams is I do a deep dive into the metals during the week preceding the live stream. And as much as I think I understand about some of these things, I keep learning a lot more when I do these deep dives. So it's really fun. So we're going to talk about zinc. Let me get the chart set up. You don't need to see this advertisement. Okay, so we're going over here now. We're talking about zinc. So here's the 5-year zinc spot. And we can see that zinc has actually started to climb as well. So let's talk about zinc a little bit. ZN or ZN, or if you're in the NATO phonetic system, Zulu November, atomic number 30. One of the first things that I hadn't thought about is that zinc is actually one of those essential trace elements that we as humans need to have in our body. You've probably seen, these Coldies tabs and folks like that talk about increasing your zinc. You really need to have zinc as part of your normal body functions, but you can get too much zinc and then it causes other problems too. So you got to watch out for your zinc. But zinc is a really important industrial metal. And Ralph, yeah, I know you love zinc, don't you? It is fun for what you do, and that's it's a good metal for mixing with other metals like copper and aluminum and magnesium to make what they call die cast. And it's just got some good properties for making test molds and test casts and things of that nature. Plus, I don't know about you guys, but man, I used to love the little Matchbox cars, and they were all die cast cars, right? So there's a lot of interesting uses for zinc. In the bigger picture, industrial uses, zinc is also used as a, get over here. Zinc is also an anti-corrosion agent. So you've all heard of galvanized steel and the zinc coatings that are used to prevent corrosion. Prevent might be a little bit strong, delay corrosion. I did 25 years in the Navy, and one of the things that I learned is that the salt will corrode anything eventually. It's going to get to it. And so no matter how hard you try, you're never going to stop the corrosion from happening. Now, what zinc is frequently used is either a sacrificial anode, so that the zinc will corrode before the hull of the ship or the propeller or the pipeline or those kind of things. So it's a sacrificial material. In fact, when I was young, when I was in my later teens and I had learned how to scuba dive, one of the ways that I made some extra change was cleaning boat hulls and replacing zincs on boats while they were still in the water. So that was kind of fun for a while when I was young and stupid and didn't realize that diving in a marina is not exactly the best thing in the world to do. But anyway, zinc is also used in batteries. So there's a lot of industrial uses for zinc. So let's go back here now and talk about pricing for zinc. We can see that the price was going up here. And if we look at some shorter time periods, here's the 60-day, and we can see it climbing. And here is the 30-day, and zinc is just, here, let me give you a little thicker arrow. And zinc has, been climbing for the last month. So why do we see zinc moving up like this? Well, once again, with all the industrial metals, I like to go back to the inventory. And we can see in the 5-year London Metal Exchange what's going on with zinc inventory. Here we are. Inventory is high in the middle of 2021, and then it starts dropping off. The same thing that we saw going on with other industrial metals. You've got places not making zinc. You've got consumption that was stalled but starts picking up, so it's consuming zinc. And so the inventory is dropping. Now, what I find interesting about this 5-year chart is that we don't see, remember in the copper chart, we saw that bottom where the London Metal Exchange it looked like they didn't want to let the inventory drop below a certain level. And we see this bottom kind of here back in 2019-ish. But I think that's just from, that's where it was when they started stocking up. But we've gone through that bottom. And this, I think, we're going to see the price for zinc continue to go up because they've gone right through the inventory that, you know, they're at the lowest inventory levels that they've been at for the last 5 years. So I think that we're going into a shortage. Well, correction, I don't think, I know we're in a world kind of shortage of zinc inventory. It's very clear on the chart. So we should see zinc prices continue to climb. And is that going to have a lot of impact on us? Well, it depends, right? So you have to ask yourself, you know, what is your local situation like? The non-ferrous yard that I sell to, they don't differentiate between zinc and cast aluminum. It's the squirreliest thing in the world. I don't fully get it. They just throw it all into one bin. And I keep asking them, you know, why are you doing that? Because, you know, I was separating my zinc and my aluminum. And then when I started going to this new yard, they said, yeah, we just throw it all together. So, I'm scratching my head. How about at your yards? Do your yards separate the zinc from the aluminum? And, you know, there's a really easy test for figuring out zinc from aluminum. I'm sure you've all seen people do this. I know that there's a number of videos that are out there where, you know, you scratch the material and then you spray it with some diluted ZEP solution. And if it turns black, you know, you're dealing with zinc. And if it doesn't, you've got aluminum. So, you know, it's pretty easy to tell the difference between the two. How many of your yards are separating them? Now, Roger CU Scrapping is saying he wish his did. Cast aluminum is 45 cents a pound and die cast is 25 cents a pound. Oh, I see. You wish that yours bought it all as one because of the difference in price. Yeah. I see that. Okay. Who else has got their yards paying them different prices for the material? Oh, by the way, yeah. You know what, Ralph? I meant to bring this up just for you because I know how much you love your brass and your different kinds of brasses and alloys. So, yeah, brass is a really important alloy. It's used especially in the maritime industries for a lot of stuff. You know, one of the things that brass is used for also a lot outside of the maritime world is in magnetic sensitive areas. So if you're in the EOD business, or engineering ordnance disposal, you tend to use brass tools because they don't spark and they're not magnetic. And so you don't risk setting off mines and explosives that have, you know, magnetic influence type fuses and things of that nature. So yeah, brass is a really important alloy out there as well, and influences, you know, what's going on with zinc. So who else here? Okay, Jeff is saying that his yard keeps zinc and aluminum separate as well. Cast aluminum at 40 cents a pound. Zinc is at 15 cents a pound. Okay, all right. I don't know why my yard throws them all together like that, because they're still paying me pretty good. Cast aluminum was 40 some odd cents a pound when I took it in. So it's not like they're, you know, lowering what they're paying for the cast aluminum. So I don't know how they're getting away with doing that. And Jose is saying this is a price difference, but Friday is next drop. I recall getting better prices in diecast. Okay. All right. Cool. All right. All right. Oh, hey, Judy, welcome. Didn't see you come in there. Great to see you. All right, so let's take a quick move away from the metals and get our safety note of the week. I got to work on some real sound effects, something fancy to. Anyway, our safety note for the week is shoes. Safety shoes. Now, I like having my props. Here's my favorite safety shoes. I actually have two pair of boots. One is a lighter weight boot for when it's really, really hot in the summer. This one's a little heavier duty. Steel toes, and you can see how messed up those toes are. That would have been cuts and gouges on my feet if I hadn't been wearing safety boots and such. Good ankle support so that I'm not twisting my ankle when I am operating, especially if I'm at a construction site. Sometimes, those construction sites are just a mess. And you don't want to be twisting your ankle and falling over and stuff like that. And then some decent tread. These are kind of getting a little bit worn out because I've had them for a while now. So you want some decent tread so you got some good traction on the ground. And this one also has a plate to prevent things from poking up through the bottom of the boot and cutting into my feet. So do you have to have something like, a big heavy boot like this? Well, I would say yes, but that's just me being a little overcautious, a little more conservative than some people. I have seen people go to the scrapyard, go to the shred pile in sandals. What in Hawaii we would call slippas, right? The thing that your toe is holding on, there's no protection on your feet. And they're handling big pieces of shred. I saw this guy drop a big chunk of scrap on his foot. Now he's at the shred pile. He's bleeding all over the place. Oh my God. And it's really not that necessary because there's all kinds of safety shoes that you can get out there. You don't have to get really expensive ones. Certainly, steel toes are better than not having, than just a regular closed toe. But at a minimum, having a closed-toed shoe with some sort of ankle support is probably a good thing to do. So Roger said after my 3-day stay, he wears steel-toed, steel-sole plate boots now. Yeah. Yeah, I hear you, Roger. I hear you. Oh, man. So, Mr. Matthews, welcome. I did not say hello. It was great to see you here, sir. No, I need trainers, and I'm always getting chased away from where I get your scrap from. Well, so you need the trainer so you can run faster is what you're saying. I gotcha. Uh-huh. Ralph is saying here that he's seen people do metal casting in flip-flops. I'm like, oh, God, come on, man. Really? That's just, yeah. I mean, you're just asking to get hurt. At a minimum, closed-toed and some sort of ankle support. But Uncle Sharky is here to tell you something like steel toe or the new Kevlar toe, Kevlar sole boots with some ankle support. That's the way to go. Because man, you don't want to be messing up with your feet. It's just hard. Crocs for all scrappers, according to Russell. Yeah, I know. I see a lot of folks out there. The scrapping channels are out there, and they got the Crocs on. Yeah. Again, I'm just being really conservative here. Call it my Navy training, but I just think we need to watch out because nothing will slow you down more than breaking a toe, like Roger when he was in the hospital because he had a nail go through his foot. Yeah, it's rough on you. Okay, well, let's get into our stock market report. I'm going to go ahead and get that up here because we've had a good discussion of our safety, and it is time now to get on to stock markets. Now, you saw the teaser was we're going to go shopping for stocks. Well, here's what I mean. Now, y'all remember that I get all of my data from the Value Line Investment Survey. They do not take advertising, and they are not a sponsor. I'm just a subscriber, but Value Line, if you want to sponsor me, I'll be happy to take your money. Anyway, no advertising. It's all just data and analysis of data. So I love this source. Great information here. And in this week's edition, one of the categories that one of the industries that they were looking at were the retail industries. So retail store industry and retail hardline industries. And there's 3 companies that I found to be really interesting for us to talk about. The first one is Walgreens Boots. Now, Walgreens is a drugstore, right? So, but here's what I really liked about Walgreens Boots Alliance is the world's premier drug distributor. They're anchored by their drugstores in North America and Europe. So we're talking about a company that has interest both here in the U.S. and over in Europe. As of August of 2022, they had 13,343 stores around the globe, almost 9,000 locations in the U.S., Puerto Rico, the U.S. Virgin Islands, and they have their pharmacy sales as well as general merchandise and things of that nature. All right, well, me, I am primarily interested in looking at a company from the perspective of dividends, and I have a very, very rigorous process that I put the companies through. So let's dig into Walgreens and see why I am talking about them. So the first thing that we see is that they have a nice dividend, 5.3%. So that's got my interest right there. And they have a very reasonable entry fee, $36 for a share. That's not bad. So this is a very interesting stock, and I'm giving serious thought to buying some of this stock. But that what I look for is 17 years of increasing cash flow, earnings, and dividends per share. So we can see that in the cash flow, they went down here, they went down here, they went down here, and here. So they didn't make it for cash flow. Earnings per share, they went down, went down, went down. So they didn't make it here. But dividends per share, look at that. All the way across, dividends per share, no down years, no flat years. They're what we call a div zero. No infractions from my criteria. Let's look at that graphically. So we can see here, here is the cash flow per share, earnings per share, dividends, and the dividends per share all going up. And if you look at the change from year to year, that tells the story very clearly. The yellow bars, the gold bars, those are your dividends per share every year, and they're all on the positive side of the zero line. So a very interesting stock, very much worth consideration in your investment portfolio for dividends if you're interested in that. By the way, I need to remind you all that I'm not a licensed financial counselor, investor, any of those kind of things, right? This is just what I do. So don't take this as any kind of, legal financial advice or anything like that. All right. So the next company that is, you're going to know this name. And again, this is going to be one of these companies. I think the people, you all are either going to love it or you're going to hate it. Walmart. Now, Walmart is the world's largest retail chain operator. 3,570 super centers that includes groceries. And Mrs. Shark actually does a lot of our grocery shopping at the Walmart around here. 375 discount stores, 600 Sam's Clubs, 800 neighborhood markets in the U.S., plus 6,101 foreign stores around the world. So it's not just a U.S.-based kind of company. We can see, though, that their dividend is really nothing to get super excited about. Oops, look at that. Look what I did. Can I? Man. So their dividend is nothing to get terribly excited about at 1.6. All right. And they're really expensive. I don't know about you, but that's way too expensive for me. So I'm thinking we're not going down the Walmart chain, but hey, I wanted to bring it up because if we look at the earnings per share, you can see they only had 2 years when their earnings per share were down. So they're not bad there, and they are qualified as a Div 0 because they always increase their dividends per share. I just don't like what they're paying. To me, it's not enough to really kind of get me super excited about investing in them. Graphically, you can see here what that looks like with constantly going up, and here's the year-to-year changes. So once again, these gold bars are always on the positive side. It's a name that a lot of people know, but yeah, I'm not putting any of my money in there because I just can't afford this price tag. All right, the last company that we are going to look into, and this one has other interests for us besides just, is it a decent company to invest in? Best Buy. Why do I like Best Buy? Because they sell electronics. And here in the US, they also sell appliances. And so there's a lot of, it's cool stuff coming out of there that people then get rid of that we can scrap. And boy, wouldn't it be sweet if you could lock up a arrangement with Best Buy that when people buy a new appliance, they contact you and you go get the old appliance from them. That would be such a sweet deal to work out because you can do this thing where they'll haul away the old appliance. But I think it would be really cool to, be able to figure out how you could hook up with a company like Best Buy to either be the company that's picking up the appliance or the company that comes pick it up from their warehouse. Let's talk about Best Buy, though, from the investment perspective, because that's what we're really doing here. So that dividend is actually pretty nice, right? 4.7%. Yeah, that's a pretty good dividend. I'm comfortable with that. And that share price is not bad for that kind of dividend. And what's really interesting about this, though, is you would think that Best Buy would be one of those companies that would kind of be on the ropes with the ability for folks to buy just about any kind of appliance or electronics online. So, Best Buy has been navigating this world of the online market along with a physical store and things like that pretty well. So, if we take a look at their financials, we see that they're not qualified for not qualified in cash flow per share. They've had a lot of years when things were down, not qualified for earnings per share. Again, a lot of years when they were down, but they are qualified as a Div 0. They have increased their dividends every year for the last 17 years. Now think about that. Even during COVID, when things were really bad, they were still able to take care of their investors and increase their dividend that year. So they're looking after their investors. and offering a reasonable dividend for you to consider. Graphically, what that looks like is, so you can see, this little drop off right here, that's the COVID drop off, right? But they have come out of that, and they're getting their act back together. But the dividends, they didn't even go flat. They kept giving investors reasonable dividends throughout that. So you can tell they're paying attention to the business when they do that kind of stuff. And I think that's one of the really important things about this kind of analysis is you can see when a company is being well managed from the perspective of not just the investor, but also, are they a reasonable company? And the reason why I say that is, let's go back up here for a minute. Cash flow, we talk as scrappers and recyclers, we talk about cash flow, how important it is to us. So we understand the importance of cash flow. And then if you are doing your job right in a business, you're going to keep bringing in cash flow. You're not going to alienate your customers and lose them, so they're not going to run away. You're not going to alienate your suppliers, so they're not going to go jack up your prices or make it hard for you to buy things. You're going to be managing your inventory levels and things like that. And that all plays out in your cash flow per year, per share, your earnings. And if you're taking care of your investors through your dividends, it just gives you the sense that that is a reasonably good company. Now, I'm not saying that these companies don't have their problems. Don't get me wrong. A lot of these big publicly traded companies have other issues to keep in mind, but they're doing a pretty good job. So let's go back down here again, and we look at the year-to-year changes, and we can see that the gold bars are always above the zero line. So again, they are qualified as a Div 0. I like this company, but of the three, if I was going to invest in any of these companies, I am thinking that it's going to be Walgreen Boots. What do you all think? Lower point of entry, better dividend, international exposure. Everybody needs to have a good drugstore around that they can get their prescriptions from, that they can get their over-the-counter stuff from. When you drive that nail through your foot and you need to get yourself a Band-Aid, or if you're e-waste Ben and you pour boiling water on your hand, oh man, did you all see that in his video today? Oh man, that just looked painful. I've scalded myself before, and I just saw the size of that on his hand, and I was thinking, ouch, that just had to hurt so bad. Anyway, Walgreen Boots, that's what I'm thinking. What do you all think? Is that the place that you would invest if you're going to make some investments? It certainly has some interest and appeal. Now, another thing that I found kind of interesting, I got a sneeze coming on, and I'm trying to not sneeze here. Sorry about that, everybody. The other thing that the Value Line Investment Survey does when they send me this newsletter every week, they have sort of a summary kind of statement thing that goes on what's happening in the economy, what the investors are doing, and things like that. And they have a page here where they rate industry price performance for the last 6 weeks. And they talk about the best performing industries and the worst performing industries. So I found this really interesting that in the best performing industries category, precious metals industries are up there at 16.2% increase over the last 6 weeks. That probably makes a lot of sense given what we've been talking about, right? With gold and silver and platinum and palladium and stuff. So that's really interesting. Metals and mining up 12.7%. And we talked about some of these companies over the last couple of weeks. So, this is pretty good confirmation that some of this stuff is making sense. Now, what I did find kind of weird was that home building and shoe sales are also in the best performing shoes. So I'm like, shoes, but I guess that kind of makes a bit of sense too, because with people, I mean, we know that there's a lot here in Florida. They're building homes everywhere, but as with the economy and people building and stuff like that, I guess your workforce, you got people buying a lot of shoes because they're out there doing stuff again. Yeah, I don't know. I don't know. But in the worst performing category, natural gas is down 9.8%. Power is down 8.9%. Maritime is down 7.6%. Petroleum is down 8.4%. Retail automotive is down 5.7%. I've read a couple of interesting articles about some of the challenges that the automobile companies are having with selling cars, and the fact that they were having to reduce prices and stuff like that. So yeah, that's going to be an interesting one to see how that plays out. So pretty interesting that as we've been talking about the precious metals and the mining companies, that they are up there in the best performing category for companies. All right, so Adam, his Walgreens shut down and they turned the building into a Family Dollar Tree. Yeah. So Adam, do you have any other drugstores in your area, or or do you have to drive pretty far to get your stuff? That's yeah. I mean, I'd hate for I mean, every town needs to have at least some sort of drugstore, right? You don't want to have to drive forever to get your just your regular over-the-counter stuff. Although a lot of grocery stores have drugstores inside them now, so you can like Walmart. A lot of Walmarts have pharmacies inside the Walmart now. So I guess that's where a lot of folks can now go to for those kind of things. All right. As we get ready to make the transition over to our good friend Scrapping Irish, remember, if you have autoplay turned on, when we end this stream, you will be automatically taken over to Scrapping Irish's live stream. If you do not have autoplay turned on your YouTube channel, you'll get a notice with a link to take you over there. One way or the other, I would love to see everybody come on over to Scrapping Irish's live stream, and we can either talk more about what's going on here. We'll see what Scrapping Irish has in store for us this week. I do want to remind everybody that next week we will be having a special guest up on our live stream here. Did I drag that out long enough? Did I make that exciting enough? So I just want to remind everybody that next week, Chris from boardsort.com will be joining us here live to talk about the scrapping and recycling business, about boardsort.com, and he's going to be identifying boards for us. So if you want to get your board identified, something you've been scratching your head over, or you just been hanging on to it going like, what in the world? Go ahead and send me a picture of the board in question. Try to make it, a good, clear picture so Chris knows what he's looking at. You can send them to me at sharkscrapper@gmail.com. If you are one of my Patreon members in the top 2 tiers, you can use Volley to either send me the picture of it or a little video clip of the product so that we can actually play the video. That way you can show the, all the sides of it. And if you have any questions, you can go ahead and ask them. By the way, if you're interested in what I'm talking about, Volley is an asynchronous, here, let me show you real quick. So Volley is an asynchronous exchange network where the top 2 tiers of my Patreon members get invited to join a group that is just us. And you can post a video, you can post a picture, you can post a word, and it's like sending a voicemail to someone, but you can do it by video or, whatever. And then it's there and we can all talk back and forth. You can do it to the group, you can do it privately. And I offer this to my top tier, my 2 top tiers in my Patreon group, as a way for us to talk about boards and scrapping and recycling and such. So it's a very interesting app that we've joined there. But again, next week we've got Chris from boardsort.com joining us. I'm going to end this stream. I will see you all over at Scrapping Irish's place. Thanks for dropping in.